All right, Munchkins. Long time no see. There's been an outcry looking for an ICT YouTube video. So here's my episode for those that are in wanting. So we're looking at the British pound versus the US dollar, or as it is commonly referred to in the Forex world, cable. So I'm going to kind of use this as a multi-pronged approach to answering a few questions. Also respond to a critical student. And we're going to be looking at the difference and contrast between those individuals that have studied my work and have a limited perspective and very low end experience, but promote themselves as having legend status or prowess, and that of the actual perspective that one would have after using it and learning it and authoring it like I have. So there's going to be a sense of arrogance in this video, so if that turns you off, you probably want to turn it off, okay? Because I'm going to speak in terms that are just blunt, and I don't expect you to like me for it, and I don't want handshakes and high fives on Twitter for it. I just have to speak my mind because it's time. So I ask a lot of times on Twitter by way of an acronym of WYDS question mark, and that is simply a prompt by me for those that follow my Twitter. If I share a tweet and it's including a chart, or I suggest a reference point of an asset class or a time frame, and I include WDYS, what do you see? I'm asking you to consider what is either happened or what is now in place in price action. So I'm going to use that model here initially in the video and ask you, what do you see? Now this is an hourly chart of cable, but I want you to look at what we have, and some of you are going to cheat and look at what's happened today at the time of this recording, November 27, 2018, approximately 8 minutes before 8 a.m. New York time. But don't do that. Study what you see here, pause the video, and consider what you would consider being a likely scenario given the market action that's shown here. Okay, I'm going to assume you paused. If you didn't, you should do it right now, because I'm going to talk about things that will kill the whole opportunity for you to learn. All right, so there's a large body of folks that are using my work now, and I'm flattered by that, and I'm aware that it's reached a lot of folks in different continents and countries, and it's amazing to see how far my stuff has gone. But unfortunately, there's some that have cropped up and have tried to make a name for themselves at my expense. But to me, it's hard to make a name for yourself if you're going to be inconsistent, especially if the moments that you say the hardest, most critical statements about me or my concepts, or the lack thereof in terms of what I'm able to show, what I do show. A lot of the things that you experience online is very filtered, and I put a lot of chaff on Twitter because I want my readers to be highly skeptical, because once you come into the fold and you really experience the learning, it's that much more of a profound aha moment. You really feel like you arrived. So it's all part of the entertainment aspect, the carnival barker that's in me that kind of like works up the crowd into a frenzy. And if they're weak-minded and they leave, that's exactly what I wanted. But if you're intrigued and you want to dig a little bit deeper, that's always rewarded. Okay, so with all that said as a preamble, I want you to consider what has taken place over here. Okay, so mentorship, folks, can rest assured that everything I'm showing here is all hindsight now. So there's no benefit to those outside the mentorship except for just a simple I told you so. Okay, so everyone in the mentorship, obviously, over 11,000 people now have seen this before it happened. Okay, I explained it. I'll give you 2 clips where you actually see me tell you this in the mentorship. So I'm going to give you little sound bites and video clips of what I actually said, and those in the mentorship can call me a liar if I'm not showing you exactly what was shown in mentorship. Okay, so we have equal highs in here. The work was done here. The runs when the liquidity, the buy stops were taken, and then price traded lower, left these equal lows intact, rallied up, failed to go any higher than this high here. Why? Why did it fail here? Because the work was already done over here. There's rarely, and I'm underscoring that and holding my fingers up like quotations, rarely an instance where we have a stop run and then another stop run and then go lower. If it does, and this is a freebie, if it ever shows a run again on another high and then breaks down, you really have a dead ringer. It's going to probably be an explosive move. In this case, it would be a large extrapolated move to the downside. Once the price action breaks down, we don't need to know that it's going to go down here. We don't need to know that it's going to go down here. We wait for price to tip its hand. Now, truth be told, I had told the mentorship students to be careful with cable. Cable is going to be very reactive and responsive to Brexit-related news. When price action presented something very generic, very run-of-the-mill, if you will, it's very easy then to step in. But when it's unclear or when there's a lot of risk around a specific market or pair, it's best to stand back and just wait. Now, a novice will run in and assume right away that they have it figured out. It's one-sided. It's going to be this or it's that. And the wise will sit back and wait for more insight. The impatience of a novice or those that lack experience, they may talk like me. They may use my vernacular. They may talk the things that I say and repeat them in verbatim and make it sound like they were the ones that created that idea. Okay, but it's really just regurgitation of everything that I've ever said in video. I guess if you listen to videos over and over and over again, I'm brainwashing you to eventually start talking like me, and that's not my goal. But those that try to promote themselves, they all sound like me, but very few and far between are able to actually deliver with the concepts. Okay, so I'm kind of like poking you to kind of like weigh these folks out, weigh them, okay? Because just because they can talk about what's already happened and use my vocabulary and my terms, it to a novice, okay, or a neophyte that's watching them, they're enamored by that. They feel like, wow, this guy has it all figured out, and I need to be paying attention. But then when you start following going forward or even looking at their examples about what they think is going to happen, they fall on their face. And that's what I do. In one particular, there's an ex-student of mine that I watch and I use as a sentiment gauge. Everything that this young man thinks he's doing, I'm fading that. And if you look at the mentorship, it's exactly as simple as that. Because hot shots, okay, are the best sentiment gauge. Those that think they're the hot shot of a market or they have it figured out, all those types of things promote this false sense of security and that illusion over time that you're feeding spectators that are watching you. You end up eventually believing your own bullshit, and I think that's what's happened with this young man. But I'm taking advantage of it because I know that that's a perfect sentiment gauge, and he's proven thus far to be almost like a 90% fade. So if we're looking at cable in respect to what could happen, what scenarios may unfold for future price moves, you have to have a storyline behind it. Okay, and the folks that study my work, they go right in and they want to look at order blocks. Like that's going to be the panacea. That's the magic bullet. And it's just one more element to a larger whole that you have to understand. So it's not a matter of what order block should I have, because if I figure that out, I'll know when to buy and when to sell. No, that's not what it is. You need to know what the narrative is behind price action. You have to have a higher time frame premise in mind. That means what is likely to occur from a directional standpoint. Now, there are some that will promote the idea of the absence of a bias is the purest form of trading. And I would counter that with that's bullshit. So those individuals that say they don't need a bias are the ones that can't derive a bias. So it stands to reason that if that's the case and that's their belief, then it's very telling about their ability or lack thereof in terms of analysis. So the whole basis of profiting, okay, or the hopes thereof of profiting, has to come on the heels of movement and volatility. If we step into this arena as a trader or an analyst even, and we assume that we are going to be profitable or have hopes that we're going to be profitable, we have to have a measure of prognostication. And without a bias, that's unachievable. It can't be reached. So if someone says, well, I don't try to form a bias, I just trade this or that. Well, you got to have a bias. Are you bullish or are you bearish? You have to start somewhere, and that's always derived from a higher time frame. Good go-to combination via weekly and daily. And the longer you spend time on those higher time frames, the more you'll probably talk yourself out of the bias. The most obvious one that occurs by studying weekly and daily, that direction, whether it be bullish or bearish, just go with that and stick with it. So without all that, I've done free tutorials where you can do that. I'm not going to rehash that. I'm not trying to do a whole synopsis on bias here, but assuming, and I'm taking a great deal of liberty here because I know some of you are going to say, well, how do I do this and how to do that? My response would be go through all my free videos on the website, theinnercircletrader.com. You have to register your account. I've been backed up recently with emails and such, but every few days or so I'll go in and see if new accounts have been started or waiting for registration approval, and then I approve them. Then you can go in and see all my free tutorials. You're all looking for market maker videos. They're in the free form. I won't put them on YouTube, and when people try to upload them, I get a flag and it tells me, and I tell YouTube to take it down because I don't want that on YouTube. It's all free. You guys can come into my free forum and see it, but it's not I'm hiding it from you. I just don't want it on YouTube because they're going to make money off of ads, and I don't want money made off of that. I can make a whole lot of money with it, but I don't want to. So the point is, when we're looking at price, we want to, number one, understand the narrative. What's the storyline from a higher time frame? And then start looking for evidences and clues as to what price may do next. So here we have this whole bit of price action right in here. This starts our narrative. Okay, they ran buy stops. Why would the market run buy stops? Because it wants to go lower, or they want to offset old longs, so it's a profitable exit. Well, prior to this whole business here, what was price doing? Trading lower. So we have deep retracement. We clear some highs here, so there's buy stops here, buy stops here, buy stops here. Large liquidity pool ran out. Tries to run one more time. Bull flag traders see that, think, okay, it's going to go higher now. Fibonacci retracement guys, they see this, maybe even falsely assume that it's a optimal trade entry for a long. Wrong. The narrative is they ran buy stops in an existing downtrend, okay, or institutional order flow. In this case, would be deemed bearish. So we're focusing on the sell side of the marketplace. We're looking for lower prices. Any rallies, okay, or future runs on buy stops should offer favorable shorting opportunities. So we have this quick decline here, okay, and those individuals that study my work, they will assume that this is inefficiency, and they're going to look for that to be filled in all through here, okay, and that's when we're going to get into the lack of experience, because when people do this, this is what they end up coming away with. They see this, okay, and they assume that it's going to fill, and arrogance will step in. Some ego-minded, impulse will force them to get online, share something, tweet it, and wait to feel like they're smart. And only after it runs up in here. Okay, so all this price action in here was another layer and a larger layer of buy side liquidity. In other words, buy stops. So we had this whole section of retail resistance. Price starts to drop down, drops down a little bit lower, drops a little bit lower, and then runs all the way up into this level here. And I'll talk about the elements and prove that I already expected this to happen anyway by way of video. And again, I have 11,000 people that'll call me a liar if I'm saying what I'm saying in this video is untrue. But up here, there's nothing inefficient up here. Okay, so this whole business, fill me, that is not going to happen because it's already been done. Over here, I introduced a concept called the ICT breaker. And some people understand it, some people think they understand it and make videos and teaching groups, but they really don't have a firm grasp on it. Sometimes they got it, sometimes they don't. But to understand the breaker, you have to understand, take a step back away from price action from a technical standpoint and just think in terms of order flow. Now, I'm not talking about depth of market or ladders or anything like that. I'm talking about just the storyline. This is what you do with your downtime. On the weekends, you want to go through past price action and see what examples took place on a 15-minute and an hourly basis on any asset class or any market. If you do this every single week, spend about 30 minutes doing it, make notations on your charts and say, okay, well, like I just did here earlier, I had these highs drawn out as equal. We had this old high back here, price ran that. If you start studying this, okay, I saw all these things back in the 90s, and it wasn't until I was approached by people that are in the realm of making markets, okay, and I bridged what was potentially able to be used as a career for me as a market maker, but I declined on all that. I didn't want to do any of that because I had figured out what the missing piece was. I took what was offered as real market making concepts, which is completely void. Anything you see on YouTube that has a market maker attached to it is basically bullshit. Okay, none of that's market maker, nothing. It's none of that's market maker. Everything that I teach is absolutely market making concepts, and it's proven because I'm the only one that's doing this consistently every single week to the pip every single week. Everyone else, they have all these things, they have these gadgets and little things they want to add on their chart. As soon as they start doing that, you just take away the whole effects of market making, because market making has nothing to do with indicators. It has nothing to do with anything except for the open, high, low, and close. Price delivery, that's it. That's all it is, okay? Liquidity and price delivery. So the third aspect of that is time. So it's time price theory. If we can see that this down close candle is the bearish breaker, okay? It's the down close candle right before a run up, clearing highs. So our eye needs to go right to that. So anyone that's starting to look at this over here and say this has got to be filled, okay, or fill me, bitch, they're completely clueless. They have no idea what they're doing, and they don't understand my concepts. If we can see inside this block of price action right in here, now I say block because it's basically a big square, okay, and all of this price action in here, right there, is essentially one big consolidation where the work has been done. What work is that, Michael? They ran the stops on the buy stops. Okay, so the market is primed now to go lower. That's this move here. All we have to do is go inside of this range, and I use the low here and the high here. Now, if we're doing like Fibonacci work, you saw in my free tutorials where you can use the bodies of the candles and get a more close depiction of where the Fibonacci should be sensitive to, okay, and overlap that with institutional pricing. But in this regard, we're looking at that range here. Okay, so I have a measurement right in here of equilibrium. That's what's showing right here. And equilibrium on this fib is just basically the 50% level. And I got a tweet to me this morning I didn't respond to, but I'll say the answer to it here, as I'm certain they're probably going to watch this video. The 50% level is basically fair value. Okay, when prices retrace back to a 50% basis of any previous swing, generally there is a bounce of some sort. But if you add context to it, like I'm showing you here in teaching, the element of price narrative, and which is a real market making concept, and you don't see that on YouTube. Martin Cole doesn't talk about it. Steve Morrow doesn't talk about it, because these guys studied all my old stuff and rehashed it and created all kinds of horseshit out of it. So long and short, equilibrium is 50%, and if you go back to that level, expect some recapitalization in the form of whatever existed prior, okay, whatever was before in terms of price movement, it will probably continue at that point in that same direction. In other words, it'll create a support and resistance theory. So we have this level here. Okay, so we have 128.79 essentially. So if we have that level based on the fib, okay, I'm going to take the fib off because you don't need it now. So we have 129.79. So what level is that essentially in terms of institutional pricing? 129.80. So if we calibrate that to 129.80, that's a price that should be sensitive anyway by itself. Now we add to it that we have a equilibrium price point inside of this consolidation. Now we can ring in our fib, and I'll explain what I'm going to do here in a minute. Draw the fib from that level down. This is where Fibonacci becomes magic. If you take the 80 level, draw it down to the low, that's our working range. Okay, that's where we can get our optimal trade entry. That's where we can look for price to reach up into, and not up into here. This does not need to be filled because it's already been balanced. Okay, this whole run up, it's done its work. It's ran to buy stops. There's no necessity for it to come back up in here and fill that. In fact, if price goes up into that, it's far less likely to trade lower because it's gone back above what would be deemed requirement for mitigation. Mitigation is going to be done in here. Anything that was taken long here to facilitate a run on in-house liquidity for like a broker or a liquidity provider, they will have to exit those positions. Many times, if the price moves quickly like this, they may not have the opportunity to unwind those longs they had here because they may be offering or making a book for sellers. So if a large body of liquidity is looking to sell this particular pair, the liquidity provider or the broker, they may have to operate in-house as a liquidity provider and take the buy side of that. So they can now mitigate this entry here at a later time when it trades back up to this price point, which is the bearish breaker. So we have this window or optimal trade entry right in here. Now all I'm going to do is just draw this out just a little bit so you can see the overlap right there. So we have optimal trade entry. You can see it here. This is 79% retracement level, and this is 62% retracement level. If we have that, and I add a let's go with a different shade of orange. Alright, so now once we have this no longer is the novice view. This is the informed view with my concepts. So the naive aspect of looking at price has now been removed. We have a liquidity pool in the form of buy stops resting here. The narrative is they've already ran stops over here. So any rally above to take these stops should be what? A selling opportunity. Okay, and we can calibrate that to 129.30 was where it can reach up to as a 79% retracement level. The low end takes us into basically this old high. So the high comes in at 28.85, which is a 5 level. Great. You can be aggressive and look to see it trade the midpoint, okay, which would be like 70.5 level. That's my sweet spot for optimal trade entry. Again, it's 70.5. And if that trades to that price level, in this case, it would be approximately 129.05 or very close to it. Or basically, you can be a seller at 129 big figure. Anything above 129 big figure is a bonus. Okay, but you have to consider this for your entry and where your stop loss would be in relationship to that formation and price. So we have an overlap of the breaker here at 129.19. That's this body here on this down closed candle. We also have the equilibrium as the anchor point, because why am I drawing the fib from here? Because I already know what you're asking me. I can read your mind. The element of needing to come back to that price point, okay, after we've had this breaker is highly unlikely. If we would have had no breaker in here and it was just a consolidation and lower highs, then the equilibrium price point would probably be reached up into, and then lower prices would be in order or would be reasonable. Okay, that's the reason why the equilibrium price point here is not going to be a magnet or draw on liquidity. It's going to be an anchor point. Okay, so, and I know all this sounds like hindsight, but trust me, I'm going to show you in the videos where it was explained before it all happened. So we have this rally up in here, and let me put this over, you can see it a little bit better. Here we are. So this run here is a run on the buy stops. We see this, we're looking to go short, sell it. Where's it going to reach for? Well, we have all these equal lows in here. There's a liquidity pool resting right below that, and also right there. What's the open on that? 127.49. Okay, 127.49. If price is above that open, as it would be here, and it's expected to trade down to that, what's the nearest institutional price level to that? 127.50, right? Look at the open again, 127.49, and if price is above that, coming down to it, because price very well could bounce there and create an opportunity to go long. I'm using this as a framework, as an anchor point or draw on liquidity. It's acting as a magnet now. The order block of 127.50 is where you would look for price to go to. Here we are. So now we've framed the market with institutional order flow, the smart money view of what should take place, the runs on liquidity, coupling that with the narrative. Then we have basically the basis of institutional order flow, really. Everything is in place now for it to go lower. Now all you do is look for an entry pattern. Entry pattern could be a run above the opening on the daily, or it could be a break down, waiting for that, and then trade up into a bearish order block. We're looking at an hourly chart here, and at this moment here, you could be a seller right at that because it's hitting the 60% retracement level, and we've already done the work of retracing back up in here. We hit the breaker. All of this isn't going to need to be filled. That's not a void in liquidity. Okay, folks that think this is a void don't understand my concepts. They only watched a couple free tutorials and didn't pay attention in class, and the results show it. But you could be a seller here, and your stop could be right above this. Now, because the work has been done, this is a good, reasonable location for a stop. So you could be a seller here and a stop here. And again, it's the hourly chart, so it's kind of like a swing trade idea. Price meanders a little bit, stays in here, bumps it again at the OTE, and now we have a breakdown. Now, this is what I was saying. You don't have to have the moxie to get in here and trade short here. You don't need that. Everyone else is going to see that as a bull flag. Wait for it to come down, show willingness to want to decline. Here's your up close candle. This is going to be a bearish order block. Wait for it to trade back to it. That's here. Okay? It hits it, bumps into it. Right there. That's where your short could be. That's a very, very low risk sell. Now you're probably thinking, well, wait a minute, Michael, isn't this equal highs? And if I sold here, how do I know it's not going to come up in here? I just explained everything to you. All the work has been done here, and all the work's been done here. They've already ran stops here. All this is a false context of forming pseudo continuation patterns. In this case, it would be a bull flag. Price comes right back up on this candle here. It opens, trades up into this candle right here. Now, what time of the day is this? That's London close. So London close is not always the cap on the daily range. Sometimes it's a continuation. What's the continuation? Going lower. So we have opportunity to go short, right at London close, hold. What are we holding for? 27.50. Now, I want to learn how to get in here. I just showed you. I want to learn how to get up in here before it breaks down. I just showed you. I want to get in when it's really low risk and I can see with a great deal more confirmation, but I'm willing to give up a little bit of the better pricing. I just showed you. Bearish order block. Okay? So your range is here to here. That's my weekly range. I'm looking for 75 to 50 pips. That's what this is. So if we have a run right in here, back up to this level, it's going to unnerve some. Okay, but your stop loss can be right above here. You don't need to have to worry about that. Yes, in a swing trade basis, this is going to unsettle some of you. But that's not going to unsettle those individuals that know where their stop should be relative to the narrative that's been priced in. Prices now made one more attempt to clear buy stops. We consolidated and then ultimately smashed down. What it reached for? 127.50. So if the liquidity is going to be attacked around that mid figure, they have to sweep below it a little bit as well, because everyone has a spread. So if we look at the low that formed, the lowest low formed today was 27.35. So we went 15 pips below that for good measure. So we dipped handsomely inside of this last down close candle or bullish order block, and you can see the subsequent response thereof. So if we know that's the narrative, now we can apply institutional levels in concert with what was just explained in this video thus far. Notice how we traded to the 20 level. We hung around the 80 level, broke away from it, came down to the big figure, traded up to the mid figure, traded down, consolidated around the 20 level, 20 acted as resistance, and then reached for the 50 level. Paused briefly around the 80, but reached for the 27.50 mid figure. Notice how every single turning point is occurring at an institutional price level. This is what I taught back in 2010 for free on baby pips. Everything that I just explained to you with cable was the basis of what I said in response to those inquiring about cable in my mentorship. Now, with that said, let's go and watch what was talked about before the fact. So mentorship, I'm giving a small little segment of what I talked about in the last 2 weeks relative to cable. And again, if this is not what was shown, you have my permission to call me a blatant liar on Twitter. We have equal highs in here, and I think that this punch up was just a fake drive, and I think we'll end up going lower as a result. Kind of like a Judas. And there you go. There's our equal highs. So I want to see it reject that and go lower and make an attack on the sell side of the marketplace. But if we rally through and take out this high, that puts everything I just mentioned on the back burner, and we'll have to take things a different direction at that point. But as long as we stay below this swing high, I'm bearish on cable. We had our expansion, cleared the stops out here, and I said it would roll over, not go up. Folks that think they understand a few things from my mentorship or the free tutorials, they were looking for this area here to quote unquote fill in, disregarding this whole candle right here, breaker. If we take that and add that to the mix, you'll see why I was suggesting that we were going to roll over. And notice what I'm doing. I'm telling you what's going to happen before it happens, then I'm going back in and telling you the reasons why. Why? Because there's a couple of yahoos in here. Okay? You're running your own groups, and I'm not going to give you all the details. You have to work that out on your own if you're going to be selling analysis. I mean that with nothing but love, obviously. Wink, wink, nudge, nudge. So we have a bearish breaker right in here. And this is not going to be needed to be filled in, okay? Because we have liquidity pool here with a breaker right there. So what's going to stop price? Well, we have heavy liquidity here, triple top type thing. We're going to call it retail resistance, is how I see it. So there's going to be traders that want to go short cable, and they're going to feel comfortable putting their stop loss right above there. But immediately to the left, you got to go back inside institutional order flow. There's your breaker. Okay, so the algorithm, IPTA, will go back to that price, trade right back into it. The high comes in at 129.29. Okay, so just 5 pips, or 4 pips rather, above 129.25. Handsomely delivered and then aggressively sold off down to the big figure. I think they're selling the narrative that 128 is support. I don't trust that. Heavy liquidity resting below here and over here. Okay, so I think that we'll see that firmer on the dollar and then run on liquidity down to here, and at the very least I think we should try to run this out. Up here it looks like it's done its work as far as rebalancing. I don't think there's any necessity for it to go any higher relative to what's shown right now. So the draw on liquidity, I believe, is 127.60 to 127.50. If we get an expansion, 127.20. Okay, so there's our things to have our notations and study that this week for cable. So there you have it. That's what it looks like when you're inside the mentorship, how I explain the market, what I think is going to happen. I do go both ways in terms of my analysis, but I tell you specifically what side of the marketplace I'm favoring, and also explain what negates that idea or premise. So it's not like I'm playing both sides and saying, see, I told you so. I'm telling you what I believe is going to happen, but what would also nix that whole trade. Okay, so you can see price did in fact deliver as we expected in mentorship. 127.50 was hit. If we do see any further downside, we could see, for instance, all of this price action here could act as a base of liquidity for new shorts accumulating and then make it run to that 127.20. Will it happen? I don't know, but this is enough for me to do one shot, one kill, and it's all that's necessary. 80 pips in the bag, easy, easy, easy trading. Simple stuff using liquidity, everything outside of candlesticks. Okay, everything is outside of the order block. It's outside of technical analysis. It's all liquidity and order flow. That's it. My institutional order flow is not what is bandied about as order flow in retail circles. They try to say that they aren't retail, but they really are retail because they're looking at things that retail's looking at. And I'm looking at where your stops are. And your stops are exactly where large funds are. And large fund stops, that's where the market goes to. Okay, so hope you found that insightful. I want to go over to the Bitcoin market, talk a little bit about that and close this video up. Well, that's a horror story for you. Look at that. All right, so I just want to give credit to my wife. She helped me call the top at 19.7. Good thing she don't watch these videos, huh, guys? So anyway, the lead's going to think I'm terrible. All right, so it's just a running gag my wife and I have. So anyway, the Bitcoin market, you can see obviously we've left our multi-month consolidation on the downside. I'm drawing attention to this old low and this old high back here and this old high back here. So from a classic support resistance theory, this would be deemed the next level of support. Therefore, there's a lot of talk about the potential to see 3,000 as the next buy. And I agree that 3,000 could see some measure of buying, but I think it's going to be in the form of profit taking, but we still could go a little bit lower. More specifically, right below this low here, I think that liquidity resting below that in the range of about 500 points or so, which would take us to around 2,500. That's the reason why I tweeted I thought that 2,500 could be interesting, would prove interesting to see if we get down there. If we get some acceleration beyond 2,500, then we really have to consider over here the liquidity resting below these lows. They would take us primarily all the way back down to the level seen over here. All right, so let's go into a tighter view on the daily, and then we'll drop into an hourly. Okay, and I use daily FX for any crypto discussions because that's what I'm familiar with. I don't like TradingView as a general medium. I know there's a lot of people that like it. I'm just not. I'm very clumsy with it, and I just don't feel I don't feel comfortable using it. Not that it's any less effective for those that do use it. There's no real platform that's one better than the other. All right, so I'm a dinosaur anyway, so I like archaic things, and MT4 works perfect for me for that. But nonetheless, looking at the Bitcoin, if you go back on Twitter, I was asked when we had this nice little pop up in here, I was asked directly by one of my followers, what did I feel about Bitcoin having seen this price action? And my response was it's now cleared to trade lower. We also talked about being a seller back in here on this breaker. And we talked about it being an opportunity as a draw on liquidity. So there was a turning point here, and there was a turning point here. And also I said that we would stay in a large consolidation, potentially could be there for several months. And we saw that from the summer months all the way into November. I said that 6,400 was the catch for all liquidity. It's been working 6,400. Okay, it moves away from it, comes back down below it, hangs around it, goes back above it, trades back down to it. It just basically works that level. Okay, so everything was accumulating around the 6,400 price level. And go back and look at my Twitter and you'll see all that stuff there. But the bias obviously has always been lower, and we were looking for 5,000, 4,000, and then 3,000. And I've since added another lower level, which is 2,500. I think personally, if we get to 2,500, that would be a great deal of capitulation, and a massive short covering rally could ensue there. Now, when I say massive, I'm not talking 20,000 or 50,000 or even 10,000. Could it rally up to like a 5,000 level? Probably. You know, you could see a double. I mean, we saw a double from the 6,400. You're basically dropping from 6,500 or so down to the low that was seen here on. Again, this is on Coinbase. So the low being at 34.56. So basically, we saw, you know, equity. If you had went short, in theory, you know, you basically doubled your account in November. Theoretically. Now, I don't trade crypto. I only do this because I have a lot of interest in my students, their interest, but not so much mine. But you go through my Twitter, you'll find whatever I said about it. I think there was also something in here I was wrong on. There was a trade in here. I did something, not a trade, but an idea about, you know, potentially seeing some bullishness, and I gave you clear directions as to what would negate that trade idea, and it was a failed idea. So it hasn't been like I'm 100%, but I'm in the high 90s. So I do suspect that 3,000 is the near-term draw. If you look at price action in here, it just looks really, really heavy. I'd like to see it break down below this candle here, this last up close candle, and if it breaks below that, there should be a pretty quick drive right into 3,000 and below. It may initially stab down to 2,800, come back up to 3,000, find some new distribution, and then roll for 2,500 if it, in fact, if it's going to go there at all. If we go down to an hourly chart, okay, we have 60-minute chart, Bitcoin. Price had a nice little pop off of the low in here, came up. We ran a short-term high here, and we ran a short-term high here, right there. So to me, my interpretation of that is anyone that was short and they're aggressively trailing their stop losses lower to protect open profits, that's where their stop loss is, and they ran that. So I'm thinking, if I'm correct, and I'm not stating emphatically that I am because I don't know, but if this is going to go to 3,000 or 2,500, this would have been the dirty work for that prior to it unfolding. In other words, we potentially could see it trade another 1,500 to 1,000 points lower than the low that was formed here. So if that's the case, they're going to want to knock those individuals out that have trailed close proximity stops, trailed lower. In other words, they went short. Anyone that was maybe going short here or whatever, they would, as price was dropping down, they want to have a real tight stop loss. They don't want to lose anything. They don't want to give the market any breathing room. Their stop is going to be above here and above here, and that's essentially what has been cleaned up here. And then we broke down one more time. So what would change my near-term bearishness on Bitcoin would be trading above these highs. I don't think it's necessary for price where it is now to trade up to clean this up, because it's in your chart right now. It's on the screen while you're watching this video. I don't see that as a draw on liquidity at this point. If for it to trade up to that price point, then we've made the low, at least for the rest of the year. I don't think we've done that. I think we're going to trade as we go lower and lower into the end of the year. At some point, even though we've had a pretty respectable decline, I don't think that's the worst of the decline, because there's going to be a lot more speed, a lot more ferocious driving lower price. That's going to be panic selling. This is just distribution. And there's a lot of people that are holding on still, thinking, well, this is going to be fine. You know, I believe in the technology. I believe in the whole, you know, the theory of blockchain and all that. And again, I'm not trying to argue with people, because admittedly, I don't know enough about, you know, Bitcoin or crypto. I just look at the price chart, and that's all I care about. And I really wish, I wouldn't have had as much interest from my students in this, because it's a reoccurring email question. You know, what every day I'm asking or I'm asked by folks that are either longtime students or new people that just discovered me, I'm in a trade, I'm underwater. Do you think it's going to go back to 12,000? I don't personally see it going back to 12,000. I don't mean that to be rude. I don't mean it to be, you know, FUD or whatever you guys call it. I don't believe it's going to do that. I think it's going to go lower before it ever would consider going up higher again, if at all. There's nothing stating, okay, anywhere that this is required to go up, even if the technology is sound. If it's viable as a industry and its long-term use and application and things, Bitcoin itself does not have to go to new highs. It doesn't even have to go 50% of its all-time high. It does not need to do that. And that's the paradigm shift that's necessary, because a lot of you guys and gals that are new, you believe anything that's being told to you, and because you're worked up in a frenzy and you're emotionally committed. I am objective about it because I don't have a horse in the race, and that's all I'm trying to promote to you is I don't have anything to gain. I'm completely objective. I'm not swayed by any monetary gain or loss. I'm not fearful of missing any moves because I'm never going to trade it, and I'm not trying to pump up something I'm holding on to and hopefully get some kind of public participation. I don't have any vested stake in Bitcoin, but I would counsel you to go back and look at the things I've said about Bitcoin. The run up into it, I was calling 20,000, but then right before 20,000, I said no, it's not going to happen. Too many people were looking for it, and the signatures for market making, putting in the top, were there, and it's all on Twitter and a couple of videos on YouTube. But nonetheless, I do suspect that it'll be a sloppy run, sideways to down. That's what I think may happen. Do I suspect there's going to be any, pump and dump from where we're at right now? I don't think it needs to do that. So I think we're pretty much limited to about 4,000. It may go to 4150. It could, just to go one more time above here and get folks scrambling to either buy it or get stopped out, because now this is an intermediate term high from a 60-minute chart basis. So there is liquidity traded to this from over here. They dropped it down, protecting their short position to anyone it would be holding short. This would be a good location where their retail idea would more or less provoke them to put their stop loss there. So if we rally above that, that could be an opportunity to see a fade. Personally, it would be better had it never going up there at all, and just trade consolidated in here and maybe run out some short-term low in here. That would be sufficient, and then go lower. Right now, from a classic chartist standpoint, retail sees this as a pennant or a coil. And if I were making this market, I would do that very thing I just said. Let me draw it out for you because you're probably not sure what I'm referring to. Okay, so essentially we are looking at something like this. And again, I apologize. I'm not real strong with the platform here. If it was MT4, I'd already have it all in there. But it's kind of like coiling. It's tighter and tighter and tighter. I would, if it were me driving this price, I would send it up above here. Run those stops. It would look like a false, well, it wouldn't look like a false breakout to them, but anyone looking at these types of patterns, they would see that as, okay, we broke out to the upside, and they would assume all kinds of things, suggesting it go higher. I would look for it to run above these highs and then maybe anticipate some short selling there, and then run the other side of this supposed coil or pennant. That's just me. I'm not saying it's something you should invest money in, but I'm just sharing my opinion over a price chart that I'm not invested in. Okay, so I don't even have a demo account for crypto. So that's the depths of my willingness to be involved in it. So let's scrunch this up a little bit. put some perspective on it. You can see we have a very clear, discernible trend line there also, which is another reason why I said that if we go higher, we could run this high here, upset that trend line, and then go lower to 3,000 and maybe 2,500. But for right now, this looks too textbook. Let's put this here. And right there. Okay, so based on trendline analysis, all the liquidity is resting here. And again, if we trade above this high here, this should offer near-term resistance. In other words, I don't think you'll need to run this, but if we do run these equal highs, I think we probably made the low for the 2018 session for Bitcoin, and it may just chop around. Do I think this is a low we can trade and go up to like 8,000 or 7,000? I don't personally see that. I think the market's very heavily weighted on the downside. And the question I'll ask this of the listeners, let's just say, for the sake of argument, you're being talked to by your buddies, or you just out of morbid curiosity went online and heard about crypto, okay, and supposedly all the Bitcoin millionaires and bitcoinrich.com, blah blah blah, all these folks that were getting rich last year, okay, maybe you're inspired to trade crypto now. Maybe you want to buy into the idea that it's going to go to 50,000, 100,000, or even finally make its way up to 20,000. If you are considering that, my question is on what basis are you going to buy? Are you just going to buy because it's cheap in terms of what? 20,000 level? Or the highest high it had, the high 1900s. Yeah, obviously, in terms of a valuation standpoint, it's cheap in regards to that. But ultimately, this thing could really just trade down to 1,000 or back below 1,000. And it could still be a wonderful industry, and Bitcoin could still be used as a medium. It doesn't need to go up in its evaluation and for trading. That's my reminder to all of you. Just because its application is available and or used does not in any way, shape, or form constitute the merit for buying it as an investment. That's all I'm suggesting to people that are just watching and looking at Bitcoin. And for folks that have more or less sat through this entire decline, arguing and arm wrestling with me, here we are. I told you this is going to happen, and I tried to warn you. All I stated was take your profits and try going short. That's all. And most of you didn't listen. And I'm not here to jab you with a sharp stick and say, haha, you're stupid. That's not the message here. I want you to not lose any more money, because people are just throwing money at this stuff and just pouring money into it. And what are you going to feel 5-10 years from now, and you look back and you can hear what I said to you and remember what I said in tweets? It's going to feel toxic to you, and you're going to have animosity. You probably have animosity towards me, like I somehow caused all this. That's a normal feeling, because I had felt like that when I was listening to people online in the 90s when I was a new trader. Oh, that guy, he was spreading all that bad stuff. This market was going to go down whether I said it was going to go down or not. All I did was point out the reasons why and when it was going to do it. So if you are thinking about buying Bitcoin, I would wait. Okay, that's all I'm saying. I don't think that this is a good time to buy it, no. And I just want to make sure that I made that very clear. And if it protects anyone from losing money, that's all it was intended to do. Okay, so number one rule in investing and trading is preserve your equity. Your capital has to be there, or you don't have a business. So if you're just going in here and just throwing money or allocating money every single week, throwing money at this thing constantly, has it proven itself to you post 2018? I don't think it has. So, is it the death knell for crypto? Maybe not. Something else will happen. Some other coin or some idea will come up and they'll get hot about that too, if the industry is going to stay around. It's like anything else, folks. There's penny stocks that perform just like this every single year. Every single year. And all of them had the same feelings you had when it was going up in the 19,000. And it's going to the moon. It's going to the moon. That's the normal market cycle. And I told you this as we were going up, and then right before the top, I said, this is what's happening. We are now in mania. We need to, reel it in. If you have profits in there, please take them. We're going down to 5,000. And it was laughed at. It was, I don't know what I'm talking about. I'm not a crypto trader. Don't listen to him. You're right. I'm not a crypto trader, and you shouldn't listen to me. And all I'm saying is don't buy it here because it could still go lower. I was talking to guys, 5 years ago, 6 years ago, and they were asking me if I was interested in Bitcoin. And I laughed at them and said, there's no way. Now, maybe I'm the fool because I didn't trade it and I didn't participate in that big bull rally. But I'm not confident I would have been able to pull the money out. Because if I trade, I'm trading big. And if I would have been in my intended position size, I'd be up there based on the range in terms of what the payout was. But I said then, I'm not interested in Bitcoin. And did those guys ride all the way up to 19.7-ish and then not take anything out? Are they rich now? Because I don't see any Bitcoin millionaires. I don't see them. There's a lot of talk in the crypto world, but I don't see anyone saying, here's what I've made and I've done it. Only the people that were involved in Bitcoin were the ones that sold out, and they even told you they were dumping it, and they dumped. So, a lot of risks, lots of risks, and I think there still are risks in this. And as long as the idea is still there that it's okay, everything's fine, we're going into a point where we're going to be a good buying opportunity, it still has downside, and no one is fearful yet. That's the thing. When everyone's talking about, is this capitulation, it's not capitulation. When it is pandemonium, crypto is dead. When you see all those types of things and no one's talking about crypto being a buy, that and only then is when it's probably, and I underscore that, maybe, okay, an opportunity to test a very small position on the long side. To what level? I don't know. Because the only thing I'm seeing right now is lower. And there's no real reason for it to go up. And that's all I got to say. Hopefully you found this video insightful. I know some of the crypto folks will probably think, well, this really didn't do anything for me. I'm just trying to be a voice of reason for those that are just now trying to put their toe in the water. I don't think it's going up from here. And that's all I have to say. Until next time, wish good luck and good trading.